when it comes to the broader market, trade today seems to be rather narrow because it is a negative market breadth, while yesterday as well the outperformance was more to do with the frontline performance. But today it's more disappointing, you'd have to say. So the mid-cap index currently down by about 0.5%, which is why you have a negative market breadth at your hands. Having said that, lots of individual movers to talk about on Chartbusters in just a bit.
This is the Times Television Network, and you're watching ET Now.
The Nifty hits 5,800 in trade today. IT and banking stocks continue to outperform. Kumar Mangalam Birla takes charge of Pilani Investment, the group's holding company. The move is part of KM Birla taking over as head of BK Birla Group companies. Lenders to Ispat Industries are rattled by the steelmakers' shaky finances. Financial institutions are exploring options to sell their stake to Tata Steel and ArcelorMittal India. Tech majors, Infosys and Wipro say customers are still spending on technology, but the mood remains cautious. And the verbal backlash continues. Commerce Minister Anand Sharma says Indian companies have created jobs in the US and asks the US government to roll back protectionist measures. The government starts the new WPI series from today. According to the new data, August WPI inflation is at 8.5% versus the old series data of 9.5%. Hi there, you're watching Chartbusters right here on ET Now. Lots of individual movers to talk about as well, and the Nifty currently at 5,800 at this point in time. Take a look at counters like BPL, which is currently holding up by about 11%. You have Ashok Leyland, or almost a 4.5% jump up on that counter, and good bit of volumes as well. So almost 5 million shares traded at that. CESC amongst the liquid universe, that counter as well has been holding up very well and more active on the futures and options side as well. So almost a 4% notch up and 1.25 million shares traded at that. And then of course you have a whole host of counters like an Exide Industries, you have a Bharat Forge, Banariaman Sugars and Asian Paints, which are looking very well in trade. But Ravi Mehta, Managing Director at Steadview Capital, he joins us now to get some more perspective on investing in India and the economic outlook here. Ravi, thanks for joining us. We have seen a lot of sectors like the banking, auto and infra sectors perform well in India. But going forward, which ones according to you are the best investment opportunities in the country?
I think to understand where the best investment opportunities are in the country, you have to first think a bit about the demographics. India, in the next 10 years, the country is going to add 140 million people to the workforce. That's more than the rest of the BRIC countries combined. And that larger group of people are going to they're going to represent new consumers. They're going to be saving. And so the savings rate of the country is going to go up structurally from 25% to perhaps 35%. And so that alone presents opportunities in companies that are focused on domestic consumption, and also banks, for example, which will absorb higher CASA and therefore be able to lend more profitably. There are other sectors as well that I think are quite interesting, but where valuations may not be as accommodating. One is infrastructure. If you look at India's infrastructure spending as a percentage of GDP, in the beginning part of this decade, it was roughly 2%. It's now close to 7%. And that's been driven by higher participation among private companies. So private companies now account for about 50% of the capital spending in the infrastructure sector, up from sub 20% 10 years back. And these companies have tremendous growth potential, just given the low built-up infrastructure in the country. The flip side is that valuations of many infrastructure companies are not done on earnings, they're done on a DCF basis, and some of the models underlying those DCFs are quite aggressive and optimistic. So I think I would focus more on the first part of the opportunity, which is really domestic consumption and financials.
But Ravi, at the same time, India is grappling with peak inflation on one hand and RBI tightening on the other. Do you think the RBI will raise policy rates by an additional 100 basis points in the present and the coming fiscal year? Or how would you play Indian equities in such a scenario?
Right. If you look at the rate hikes that have occurred, there have been 4 rate hikes so far this year. I think the consensus is for another rate hike to occur, perhaps of 25 basis points or so. That's reasonable given what inflation is in the country. Now that said, I think a rate hike above 25 bips may not be necessary as a result of the fact that 30% of inflation is food inflation, and food inflation should start falling in terms of the year-on-year percentage growth numbers that we see as a result of the strong monsoon. The most recent monsoon was on par with the historical average, much improved from the previous year, and also a result of simply the high base comparison. So as food inflation starts to structurally decelerate, that should help bring down perhaps the inflation numbers overall. So I don't think any dramatic rate hikes are warranted, but perhaps 25 bips is likely.
Ravi, just coming back to the GDP growth targets, what is your target for the fiscal and how much of a marginal increase are you expecting?
In terms of the GDP of the country, I think one can expect in the medium term, something between 8 to 10%. I think it's always hard to call a precise GDP number, but I think if you look at India's structural GDP growth rate, it's been accelerating from 3.5% pre-1980s. Since then, it's consistently been increasing as the government has initiated a number of reforms, bringing down import tariffs, facilitating greater infrastructure spending, and I think that structural acceleration continues. We touched on the higher savings rates that we're going to see in the country. That also will help accelerate the GDP growth rate. So I think 8 to 10 in the medium term, and perhaps closer to 10%, 10 or 11%, maybe 3 to 5 years from now.
Now, just talking about the kind of valuations that we are currently running at and the liquidity inflow, Ravi, India attracted 50% of all emerging Asia fund flows in the first quarter FY11 and almost all the flows in August. Do you think this liquidity support will continue and therefore the risk reward is favorable for going long on India / the Nifty despite the kind of stretched valuations that we're currently quoting at?
So my sense on liquidity is that I think the most important driver of liquidity is, what's happening with sentiment globally. So if you look at, for example, U.S. and Europe, should there be a renewed crisis in the banking sector or perhaps a sovereign crisis which ripples through the banking sector, I think that will inevitably cause a contraction in flows coming into India and perhaps a net redemption of flows from India. So it's very much to take a call on what's going to happen to flows, one has to take a call on the degree to which or the probability of a crisis in the West. Absent that, I think India should continue to absorb healthy flows simply because of the long-term story of the country, right? I think essentially what's driven the BRIC countries, what's driven the BRIC economies has been reforms and a low base. GDP per capita in India is just 1,000 compared to 40,000 in the United States. If you compare India to China, China's at a much higher base of 5,000, and so structurally it's more difficult for China to grow as fast as India can grow in the long term. And other BRIC countries, Brazil and Russia, are at I think 8,000 and 11,000 GDP per capita. So again, their structural growth rates will be lower. India's growth rates will probably be the best among the group going forward, and I think that's the case for continued healthy liquidity inflows into the country. I think what one has to monitor is valuations. India is currently trading at something like 18 times FY11 consensus earnings, and so it's going to be important to watch that multiple. When that multiple starts to get above 20, 22 times, people remember what happened last time the multiple got that high, and they're going to be conscious they're going to be cautious about deploying incremental capital at that level. So I think valuations is the other factor one has to take into account.
Ravi, finally, in the current equity market scenario, what would be your top investment themes, sectors and ideas from here on for the medium to long-term basis?
Currently, we're focusing on two themes. The first is domestic consumption, and in particular, companies with strong brands. India is a land of entrepreneurs, and I think unless you need to have a moat to have a strong business that earns high returns on capital, and oftentimes that moat in the domestic consumption world comes from a strong brand. And so we're finding companies that are trading at 9 to 13 times FY12 earnings, which are growing as a result of their leverage to the domestic consumption story, perhaps at 25 to 35% year on year on an EPS level. We're finding companies like that, and that I think is a very good long-term bet to make. If you compare that to the Nifty index, for example, trading at 18 times or so, with perhaps 15 to 20% earnings growth, consumption branded companies with approximately half that multiple and much higher growth are going to be very good bets to make. I think the second area is knowledge process outsourcing firms. So I think if you look over the last 20 years, there was the first wave in outsourcing was IT services companies like Wipro, Infosys, Tata that perform finite software projects. The second wave was the BPO wave, where there was call centers and other simple processes that were outsourced. And the third wave is the KPO wave. So that is MBA level jobs or similar jobs, perhaps in the middle office of a company, being outsourced. And a company that's leading that initiative is eClerx. And this company is growing 45% a year. They've maintained 60% growth over the last 5 years, and they're trading at approximately 10 times FY12 earnings, which compares to Infosys, Wipro, and other companies at perhaps double the valuation with half the growth. So I think that's an interesting sector, and perhaps thirdly, would be financial services. Many of there are certain companies in the sector that are trading at very high multiples to book, but if you look pretty thoroughly, you can find companies that are in either, for example, mortgage financing or equipment financing that are trading at 1 times book or sub 1 times book, and for a company that can return 20-25% ROE and be a play on essentially rising penetration of financial products and leverage in the country, this is an interesting place to look. And some companies that are in that category are Indiabulls Financial Services and S-Ray Infrastructure Finance.
All right, Ravi, leave it at that. Good speaking with you. That's the macro picture coming. But coming back to trade, 5,800 seems like it's here to stay. So on last count, 5,803 is where the index is, and lots of individual movers. One such case in point being Sri Adhikari Brothers. Pull up the stock price for you. Markan Adhikari, who's the MD of the company, he joins in to talk more about how the business is currently shaping up. There you go, almost locked in a 10% upper circuit. That's the SAP TV stock price for you right now. Mr. Adhikari, thanks for joining in. First, let's talk about your current business plans and where it may be headed, because your new music and comedy channel, that's Masti, has been getting rave reviews everywhere. How are revenues panning out?
Yeah, I said that Masti has outperformed. It is doing extremely well. I think in the past, no channel has done so well in such a short span. So Masti is doing really well. And as far as the revenue is concerned, this is the first year of the operation. So now the all advertising revenue has started coming in. But the first year is always conservative as far as the advertising is concerned. But the way we positioning, we are number 1 from the last 6 weeks.
Sure. When do you hope to break even, Mr. Adhikari?
We will break even at the end of the second year.
End of the second year. So any more such launches in the non-comedy channel space?
We'll be definitely doing some niche channel in the year to come. But I would not like to say that idea because that idea is the main key what we launch. But we are definitely going to launch one more in the coming year.
Sure. Since